Yo, what's up traders? Welcome back to another video. Today I'm going to walk you through two trades that formed yesterday during the London session on gold and Nasdaq. And today I want to clarify the high and the low of the day, high and the low of the session. Now, yesterday we had it's just a normal day where the market moves back and forth towards the high and the low of the day. And as you can see, we have our reference point. So the market is oscillating, between the open. It's not like it's moving in any particular direction. So with this information in mind, then I know that today all you are doing is waiting for the market to come back to the extremes. That is where you can be able to, scalp a trade, because on normal days, because this is a normal day, on normal days, we don't expect any trend. All we're expecting is, back and forth movement. So these white lines are the previous day's high and low. And the information that I had, that is the first hour. This is the first hour of the London window. All right. We have our high of the day and we have our low of the day here. This is our low of the day. But London comes down in one push, two push, then three push and pins the low. All right. So all I'm doing is I am waiting at the extremes to see whether any setup forms. All right. So let's go look at the 1 minute time frame and see what happened. So that is our information right there. This is the high of the day, this is the low of the day, and this is the reference point. Now, the first hour sets the high and the low of the session, but we know we are at the low of the day. We are below the low of the day. So we are just looking for the pump and dump setup, because as I've said again, there is no particular direction this market is moving. It's just oscillating around the open. Now, the second hour comes down, pins the low of the day, the new low of the day, the low of the session. But there is no clear break of structure, as you can see. In fact, as this market was forming, it was just pinning up and down. It was just pins, all these pins. There was no clear direction of what the market really wanted to do. But since we know that we are trading at the extremes, we are looking for a reversal. So at 3:30, yes, now at 3:30 things start to shift, because if you are looking at this market in live time, there were a lot of traders who were trapped yesterday, because all these candles, the way they were forming, they were very strong in terms of the way they were forming. Well, for the people who don't have the patience to just sit and wait for the candles to close, these candles, that they were forming very big, big potential candles, but low to them, it was just a trap. This is where the market really broke structure in terms of looking for a reversal. This is where the market gave us that W pattern. All right. Our W pattern. So we just look for our retest and engulfment. This is where our engulfment is. At 3:46, 1 minute into the new 15-minute candle. Now, the London session now, I've seen the London session in gold. Really, what's the word? Has so much, I don't know if it's volume or what's the word? You need a very big stop loss. Like this is a 70 pips stop loss for a 200, 300 pip move. But it still, it all comes down to your, what's the word? To your risk management. Because for me, I can trade with this stop loss, but I am also toning down the risk. Because I know the risk reward, I have that risk to reward ratio. Now, this, well, in terms of, is this a really a very perfect setup? No. It's just that we are at the low of the session, and yeah, at the low of the session, the low of the day, and the reversal, this is how the reversal forms, regardless of how wide the stop loss is. Now, Nasdaq gave us a very beautiful continuation setup yesterday. Actually, that was my best trade setup yesterday. Let me show you from the beginning. So, as you can see, the market opened high, but failed to continue to the previous day's low and continued falling. So when I came to the market during the first hour, that was the information. Now look at the way this market is. This market clearly is a broken down market, and it's continuing to fall. Don't expect a reversal in a market that looks like this. Where are you going to get a reversal? This is just a trend. This is a broken down trend going down. So in my mind, I knew, this is a trend. You can get in absolutely anywhere and still get your money. So let's go to the 1 minute time frame and look at how the market formed, gave us our setup. So keeping in mind that this is a broken down market, this was the first entry, breakout, retest, continuation. But this is where I entered the market for 110 pips. Now I want you to look at the way this market up to here. look at the way one push, two push, and then when this candle, there's something that I've noticed with candles that look like this. They have only one pin. They have only one pin. There is nothing above, or say the pin is above here. There is nothing below here. This is a signal that they will not continue lower than that. They will come, and in the next candle they will pin it, but they will reverse. Well, this is something that I've noticed, so it is just an observation now, and I've been observing this for a while. So when I saw that one push, two push, this candle at 310, I knew that the next candle they will pin it, but they will not move further than that candle. Just like there was a trade that I showed you. I got out with 43 pips because I saw this formation, and I knew that after this trade they are coming to stop hunters. They are coming to get the money after this candle formation. So I knew that after that candle formation, that is where I'd be getting in. So this is the entry, and for sure they never came back. They never came back. They continued lower and lower for 300 pips, but I got out at 110 pips. So this was my best trade setup yesterday, because it was loud and clear. It was screaming at me, yo, I am falling. You can get absolutely anywhere and still make your money. This is the setup that Stacy Buck says when you use a moving average, you can be very, very successful that day, because the market moved about almost 1,000 pips, almost 2,000 pips. So yeah, anyway, hopefully guys, I have opened the eyes of a few people. If you've been struggling to navigate yourself excuse me if you've been struggling to understand the concept of continuation and the high and the low. Anyway, hopefully you got value from today's video. Stay disciplined, stay focused, stick to the plan. Stick to the plan, and everything will pay out with time. See you in the next video. Peace out.